Well, hello and good afternoon. James Preston with you live from 𝐊𝐴𝐿𝐴𝐼𝐴 Studios in Sydney. It's lunchtime and you know what that means. It's time for the Mid-Market Pulse. Let us zoom our lens on the Australian share market performance and stay with us, of course, to hear our stock fact of the day. Australian shares hit a record high today with the benchmark index ASX200 touching a fresh all-time high on the back of a strong rally in mining and healthcare stocks. The equity market witnessed a bullish trend despite the rise in COVID-19 cases. The S&P ASX200 was trading higher by 8.7 points or 0.12% at 7,403 by lunch. Early today, the index opened higher and gained as much as 0.3% to hit an all-time high of 7,417.6. On the COVID front, the state of New South Wales recorded 145 new locally acquired COVID-19 cases in the past 24 hours. This was the highest daily number of new infections since the current Delta variant outbreak began last month. Moving on to the sectoral front, 7 of the 11 sectors were trading in the red. Material was the best performer with 1% gain, followed by healthcare, which rose 0.7%. Among others, industrial, consumer discretionary and telecom were trading higher with modest gains. On the flip side, REITs was the worst performer, down 0.6%. Some of the other sectors that witnessed selling pressure include information technology, utilities and also consumer staples. Let's turn our attention to the biggest gainers and losers that captured investor attention by the mid-market session. Rare earths mining company Lynas Rare Earths, formerly Lynas Corporation, was the top percentage gainer on the ASX pack, rising over 9%. Some of the other notable gainers were mining alumina, nickel mines, global online marketplace Redbubble and mining company Oz Minerals. On the other hand, gold miner Silver Lake Resources was the top loser on the ASX, falling nearly 6%. Some of the other worst performers include infant formula company A2 Milk Company, gold miner St Barbara, Evolution Mining and also private provider of quality early childhood education and care G8 Education. And now it's time for a short break, but stay tuned as I'll be back with more trending updates in just a moment on 𝐊𝐴𝐿𝐼𝐴 TV.
Property by 𝐊𝐴𝐿𝐼𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐼𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐴𝐿𝐼𝐴.
Welcome back. Great to have your company on 𝐊𝐼𝐴 TV. James Preston with you live from our studios in Sydney, and you are watching the Mid-Market Pulse. On this note, let us shift our focus now to stocks that are creating a bit of a buzz today. Apparel and footwear retailer Best & Less Group Holdings is scheduled to make its debut on the ASX today. The retailer has successfully raised 60 million Australian dollars via an initial public offering at an offer price of $2.16 per share. As per the company, the offer garnered a strong response from institutional and retail investors. Macquarie Capital and Bell Potter Securities acted as joint underwriters and lead managers to the IPO. Best & Less Group is a leading player in the clothing and footwear market, which is estimated to account for a total consumer spend of 23.8 billion Australian dollars and also 3.5 billion Aussie dollars in New Zealand. The company, which focuses on baby and kids apparel, has a strong physical store network in both Australia and New Zealand, while it also sells through online channels. It operates the Best & Less brand in Australia and the Postie brand in New Zealand. Moving on, shares of Revasum surged nearly 7% to 39 Australian cents after the company reported strong earnings in the first half of the current fiscal year. For the first half of the financial year 2021, the semiconductor processing equipment firm Revisum reported unaudited revenue, of US $4.6 million, with an unaudited gross margin of 48.4%. The unaudited cash balance stood at US $6.1 million. During the period under review, the company received its first purchase order for 2 flagship products, 6 EZ silicon carbide water polishers. Next up, the share price of Argosy Minerals gained up to 4% after the miner reported continuing progress at the Rincon lithium project. The project, which is located in the Salta province of Argentina, has now defined its proprietary clean lithium processing technology at Rincon. The company has developed a chemical process technology to produce battery-quality lithium carbonate. The process aims to consciously limit the environmental footprint. Moving on to shares of Boral, which were trading flat with marginal losses on a plan to sell its Australian timber business. The company said in an ASX filing that it struck a deal with Allied Natural Wood Enterprises, famously known as the Pentark Group, to sell its Australian hardwood and softwood timber business. Boral will be selling the business for 65.4 million Aussie dollars, while the divestment is likely to get completed in 2021. The company has decided to divest its timber business as part of its strategy of resetting its asset portfolio that is expected to position Boral as a stronger company. And now it's time for another short break on 𝐊𝐼𝐴 TV, but stay tuned as I'll be back with more updates in just a moment.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐼𝐴 TV.
Welcome back. Great to have your company on 𝐊𝐼𝐴 TV. James Preston with you live from our studios in Sydney, and you're watching the Mid-Market Pulse. The next company that we'll have to explore is Ketone Dairy Corporation, whose shares were trading 3.5% higher at 15 cents. The manufacturer and exporter of formulated dairy and wellness products shared an update on the start of its contract with supermarket giant Coles. The company reported that the strong opening orders and forecast of more than Australian $800,000 covering less than 2 months. It further said that the first product was manufactured and dispatched in late June 2021. Next up, in shares of City Chic Collective rose over 5% to $5.70 on acquisition news. The retailer, focused on women's apparel, footwear and accessories, has acquired a 100% stake in shares of JPC United GmbH, known as Navabi, for 9.6 million Aussie dollars. City will fund the acquisition from its present cash balance. Navabi is an online marketplace selling hundreds of third-party women's plus-size brands and has even developed its own brands exclusively sold on the marketplace. Moving on, let's have a quick look at global market performance. On Friday, all 3 major US stock indices settled at record closing highs on an upbeat corporate earnings outlook, as well as a rise in investors' appetite for riskier assets amid signs of economic revival. The Dow Jones surged 0.68%, the S&P 500 gained 1.01%, and the Nasdaq Composite added 1.04%. Moving on now to the Asian markets, and most of the regional markets started the week on a positive note, tracking some firm cues from Wall Street. Japan's Nikkei, which opened after a long gap of 1 week, surged 1.6% in the opening trade. China's Shanghai Composite was trading flat, and bucking the trend, South Korea's Kospi was down by 0.25%, while the Straits Times in Singapore was trading 0.2% lower. Well, that's all for now, but keep watching 𝐊𝐼𝐴 TV as we bring you the latest news and trending market updates live from Sydney. I'm James Preston for 𝐊𝐼𝐴 TV.